Welcome back to We Are Cosmic, your go-to source for professional cryptocurrency analysis and insights. Today we're diving into one of the most exciting developments in XRP history, and this could be a game changer for anyone holding or tracking XRP. If you've been following XRP, you know that the market has been moving fast, but the real story is happening behind the headlines, inside the institutions, the ETFs, and the over-the-counter supply that could push XRP into entirely new territory. 2025 has already been a monumental year for XRP, with institutional interest growing and early adoption taking shape. But the coming months could be even more critical. Data from over-the-counter markets shows that XRP liquidity is moving quickly and ETFs are actively buying. When institutional ETFs begin to acquire XRP at scale, the supply available on exchanges shrinks dramatically. This is not speculation. It's measurable, observable, and mathematically predictable. Understanding these trends is essential to forecasting XRP's next moves. The core of this story lies in supply and demand dynamics. Currently, there is a finite amount of XRP available on over-the-counter desks and in what are sometimes called dark pools. Estimates vary, but the numbers suggest that only a few billion XRP remain accessible outside active ETFs. Once institutional ETFs, both existing and upcoming, begin purchasing at full capacity, much of that supply could disappear within a matter of months. As liquidity tightens, price pressure increases naturally. This is why XRP's next wave could be both fast and significant. It's important to note that this is not hype. The process is measurable. Daily ETF inflows are already significant, averaging tens of millions of dollars per day, and this number will grow as more ETFs launch. Each additional ETF increases buying pressure on a limited supply, creating a feedback loop where scarcity drives value upward. Understanding the mechanics behind this is critical for any serious XRP investor or analyst. Another factor to consider is the upcoming institutional interest from major financial players. Once large asset managers like BlackRock, Vanguard, or Fidelity enter the XRP market with spot ETFs, the scale of buying could outpace current OTC and exchange availability. This is not a matter of if, but when. Their entry will amplify existing trends, and early insight into supply levels and ETF volume gives a clear picture of how quickly the market could react. Today's analysis will focus on breaking down these dynamics clearly. We'll look at over-the-counter volumes, ETF inflows, and exchange liquidity. We'll also explore how these forces could compress the available XRP supply and what that means for pricing potential. By examining these factors, we'll understand why XRP could reach new milestones and how long it might take for these changes to unfold. Finally, part of this episode will cover the tools and tracking platforms that allow investors to monitor XRP supply and ETF activity in real time. Accurate, transparent data is key to understanding market behavior. By using these insights, XRP holders can make informed decisions about timing, exposure, and potential opportunities in the market. So whether you are a seasoned investor, a cryptocurrency enthusiast, or someone just getting started, this series will provide clear, professional, and actionable insight into XRP's upcoming trajectory. Grab a notebook, focus, and let's break down exactly how supply, ETFs, and institutional interest are lining up to create one of the most pivotal periods in XRP history. Over-the-counter markets are where large-scale buyers, including institutions, acquire XRP directly without affecting public exchange prices immediately. Unlike standard exchanges, OTC trades are private, high-volume transactions. These trades can move billions of dollars in assets without triggering sharp spikes on public order books. Currently, the available OTC supply is estimated between 3 to 5 billion XRP free, though some sources suggest it could be lower. Regardless of the exact number, it's clear that this supply is finite, and it is being consumed rapidly by active institutional buyers. The real catalyst for XRP comes from ETF inflows. Exchange-traded funds designed for XRP allow institutions and retail investors to participate in the market efficiently. Each ETF purchase contributes to cumulative demand that consumes the existing OTC supply. For example, current daily inflows from 4 active ETFs are estimated at approximately $45 million per day. When applied to the available OTC XRP, this level of demand could theoretically deplete billions of XRP in a matter of months. This math is straightforward. If we take an average of $45 million in daily ETF purchases and consider that each ETF targets XRP specifically, the limited OTC supply is under pressure. Once the supply diminishes, institutional buyers will inevitably move to exchanges to complete purchases, which directly impacts public pricing. As we will see in later parts, this creates a predictable upward pressure on XRP's market value. It is also essential to consider all the future ETF launches. Beyond the current 4 ETFs, additional ETFs are expected to enter the market soon. Projections suggest that by the end of the next quarter, there could be up to 8 active ETFs. Each new ETF increases buying pressure, reduces the remaining OTC supply faster, and accelerates the timeline for scarcity-driven market movements. The combination of current and upcoming ETFs is a structural shift, not a temporary market trend. Early institutional activity also signals growing confidence in XRP as a regulated and operationally reliable asset. Large-scale buyers are not participating randomly. They analyze supply, liquidity, and potential price appreciation. The fact that these institutions are actively acquiring XRP through both over-the-counter and exchange-traded fund channels indicates that professional entities see real utility in the token. It is no longer a speculative experiment. It is a tangible financial instrument integrated into institutional strategies. Another key factor is dark pools, which are private trading networks often used by hedge funds and large asset managers. While the exact volume within dark pools is harder to quantify, evidence suggests that dark pool XRP is also being absorbed by ETF demand. The combination of OTC depletion and dark pool absorption creates a near-complete tightening of available XRP for large-scale transactions. This tightening is critical to understanding the scarcity-driven dynamics that may drive future price increases. For market participants, monitoring OTC and ETF activity is crucial. Websites and analytical platforms are now tracking exchange balances, inflows, and outflows to provide near real-time insights. Understanding these metrics allows XRP holders to anticipate periods of heightened market activity and potential price acceleration. Transparency in these markets is improving, and investors who stay informed have a clear advantage. The core principle is simple. Limited supply combined with increasing demand drives price growth. With an estimated 3 to 5 billion XRP remaining in OTC and dark pool inventories, and with ETFs purchasing tens of millions of dollars daily, the available supply is shrinking rapidly. Once these sources are depleted, institutional buyers will need to access public exchanges where liquidity is significantly lower. This shift creates a natural upward pressure on market prices as demand outpaces available supply. Let's break down the numbers. Current daily ETF inflows average roughly $45 million per day across 4 active funds. Over a 30-day period, that's approximately $1.35 billion in demand. Extending this over 90 days yields $4.05 billion, which is approaching the higher end of OTC estimates. When additional ETFs are launched, especially those backed by major institutions, these numbers could double or even triple. This math highlights how quickly OTC and dark pool XRP could be absorbed, potentially leaving minimal supply on exchanges within 4 to 6 months. 1. Scarcity on exchanges is a critical turning point. Once ETFs and institutional buyers cannot rely on OTC sources, they must purchase XRP directly from public order books. This scenario creates high demand against limited liquidity, which historically results in rapid price appreciation. The effect is compounded by the fact that XRP is not a widely held token in terms of retail investors relative to institutional participation. Each incremental increase in buying pressure is magnified because fewer sellers are available. Historical data supports this behavior. Similar patterns have been observed in other assets when institutional interest outpaces available supply. Prices can spike quickly when demand exceeds liquidity, particularly in highly liquid but finite markets like cryptocurrency exchanges. In XRP's case, the combination of OTC depletion, ETF accumulation, and upcoming institutional entry sets the stage for a mathematically predictable price increase. Another factor to consider is the scaling of ETFs. Initial ETFs may have modest daily inflows, but as performance is validated and additional ETFs launch, total inflows can accelerate rapidly. For example, if ETF numbers double from 4 to 8, daily purchasing volume could rise to $90 million per day or more, further compressing remaining supply. This escalation shortens the timeline for scarcity to impact prices, potentially compressing the process from a year to just 4 to 6 months, as current calculations suggest. Price projections based on this scarcity-driven model are not speculative guesses. They are derived from quantifiable supply, demand, and ETF flow data. Analysts can use these metrics to estimate when supply will tighten and how pricing pressure will increase. While short-term fluctuations may occur due to market sentiment or external events, the underlying supply-demand structure provides a clear roadmap for medium-term price behavior. It's also worth noting that major institutional players, such as BlackRock, Vanguard, and Fidelity, have yet to fully enter the XRP ETF market. Once they do, the available XRP supply for large-scale acquisitions will shrink further, creating additional upward pressure. The combination of existing ETFs, upcoming ETFs, and these major entrants establishes a multi-layered structural scarcity that is rare in crypto markets. Finally, understanding these mechanics allows investors to plan strategically. By tracking ETF inflows, OTC depletion, and exchange liquidity, holders can anticipate periods of high market activity. Recognizing that scarcity-driven price movements are a predictable, mathematically observable phenomenon helps remove emotional bias from investment decisions, replacing it with a clear professional framework. In conclusion, XRP's price mechanics are heavily influenced by supply scarcity and institutional demand. ETF inflows, OTC absorption, and the upcoming participation of major financial institutions create a predictable path for upward price movement. Analysts who understand these forces can anticipate timing and potential milestones, making XRP one of the most structurally interesting assets in the cryptocurrency ecosystem today. Building on the previous discussion of supply scarcity and price mechanics, Part 4 focuses on the role of institutional players and upcoming ETFs, and how their activity will shape XRP's market structure and liquidity. These forces are central to understanding the next phase of XRP's growth and its potential price trajectory. Institutional participation is fundamentally different from retail trading. Large-scale investors and asset managers operate with strategies based on long-term returns, risk management, and structured financial products. They have the capital to purchase XRP in volumes that can significantly impact supply, especially when combined with ETF inflows. When institutions enter the market, the effect is compounded as their purchases are typically executed systematically, ensuring minimal slippage while gradually absorbing over-the-counter and dark pool inventories. Currently, 4 XRP ETFs are active, and their daily purchases already account for roughly $45 million in inflows. However, the market is only at the beginning of institutional adoption. Upcoming ETFs, expected to launch within the next few months, will significantly increase total daily demand. Estimates suggest that ETF numbers could double to 8 within the next quarter, which would effectively double institutional buying pressure. This structural increase in demand compresses available supply, making it increasingly challenging for new buyers to access XRP at current price levels without driving the market higher. Major financial players such as BlackRock, Vanguard, and Fidelity are projected to join the XRP ETF landscape soon. Their involvement will introduce unprecedented capital inflows. For example, if each of these institutions targets XRP purchases in the billions, the available OTC supply could be exhausted within weeks of their entry. With public exchange liquidity limited, any additional demand will translate directly into upward price movement, a scenario that is both mathematically predictable and strategically significant. The effect of institutional activity extends beyond simple scarcity. It also creates a more transparent and structured market environment. ETFs operate under regulated frameworks, providing consistent inflows and creating predictable patterns in market behavior. As these ETFs accumulate XRP, they essentially remove a portion of circulating supply from active trading, introducing a scarcity effect that enhances market stability in the medium term. In contrast to retail speculation, this structured participation introduces reliable demand, making XRP increasingly attractive as a long-term investment asset. It's also important to understand the interplay between OTC markets and ETFs. OTC desks are the initial source of XRP for large institutions, allowing them to acquire tokens without impacting public exchange prices. As ETFs increase in number and scale, the depletion of OTC supply becomes more pronounced. When OTC inventories are reduced, institutional buyers must turn to public exchanges to fulfill demand. This transition creates a highly sensitive market environment where even moderate buying can result in rapid price movement. Monitoring these transitions is essential for understanding both short-term volatility and long-term growth potential. Furthermore, the evolving market structure encourages more strategic approaches for holders. With scarcity, predictable ETF inflows, and institutional accumulation, XRP holders can plan their positions with greater confidence. Understanding the timing of ETF launches, expected inflows, and remaining OTC inventory allows investors to anticipate periods of heightened demand and price momentum. This professional perspective transforms XRP from a purely speculative asset into a more predictable investable instrument. Traditionally, XRP has been limited in DeFi applications due to the lack of native smart contract support on the XRP ledger. This limitation meant that most holders were simply waiting for price movements instead of actively putting their assets to work. However, Flare Network changes the game. As an EVM-compatible Layer 1 blockchain, Flare allows XRP to be wrapped into FXRP, a token compatible with Ethereum-style smart contracts, opening access to lending, borrowing, decentralized exchanges, and yield farming. One of Flare's most significant innovations is USDT Zero, a native stablecoin integrated with the network. USDT Zero provides a stable liquidity base that can move seamlessly across chains without traditional bridges, creating efficient and secure pools for lending, staking, and trading. By pairing XRP with USDT Zero, holders can participate in deeper liquidity pools and leverage collateralized positions, increasing both the usability and profitability of their holdings. Another crucial feature is FXRP. When XRP is brought onto Flare as FXRP, it becomes a fully composable asset within the DeFi ecosystem. FXRP holders can deploy it in lending protocols, decentralized exchanges, and derivative markets. Meanwhile, the original XRP remains on the XRP ledger, preserving the core asset while enabling DeFi participation through a parallel ecosystem. This dual structure model enhances liquidity, utility, and flexibility for holders without compromising the security of the XRP ledger. Staking through Firelight further amplifies XRP's utility. Staked XRP generates liquid staking tokens, which can be used in DeFi while still earning yield. This means holders no longer have to choose between earning passive income and maintaining liquidity. The same XRP can perform both functions simultaneously. By integrating staking with FXRP and USDT Zero liquidity pools, Flare establishes a robust framework for yield generation and financial innovation on the XRP ledger. The combined effect of these mechanisms is significant. USDT Zero provides stability, FXRP enables composability, and staked XRP allows for flexible yield strategies. Together, they create a comprehensive DeFi ecosystem for XRP, attracting both retail and institutional participants. This ecosystem not only increases the practical utility of XRP, but also indirectly supports price appreciation by locking up tokens in productive use rather than leaving them idle on exchanges. Moreover, the Flare Network's architecture facilitates smart contract deployment and cross-chain interoperability. Native smart contracts on the XRP ledger, along with EVM-compatible contracts on Flare, enable developers to create decentralized applications, dApps, cross-chain bridges, and NFT marketplaces. This growing ecosystem strengthens XRP's position as a functional, scalable asset in the broader blockchain and DeFi landscape. The strategic importance is clear. As XRP becomes more actively used in DeFi and staking, the circulating supply on public exchanges diminishes, while demand for functional, yield-generating tokens grows. This creates a positive feedback loop: higher demand, lower available supply, and increased adoption across decentralized finance. For holders, understanding this loop is critical. They are not just waiting for market rallies. They are participating in a new financial infrastructure. One of the key factors supporting XRP's adoption is regulatory clarity. Unlike many cryptocurrencies, XRP has been navigating legal frameworks that have historically created uncertainty for its development. Recent developments, particularly regarding recognition of XRP as a compliant digital asset in multiple jurisdictions, have boosted institutional confidence. For example, the approval of Ripple's RLUSD stablecoin by Abu Dhabi's Financial Services Authority, FSRA, within the ADGM signals a significant step for regulatory recognition. ADGM operates under English common law, providing a familiar and stable framework for international financial institutions. This creates a trustworthy and predictable environment for businesses and investors to operate in. Ripple's strategic approach to regulatory compliance has helped XRP gain acceptance in China's high-value financial centers. ADGM, known for its advanced fintech and crypto regulations, hosts hundreds of registered entities including global banks, asset managers, and investment firms. By establishing XRP and its stablecoin within these frameworks, Ripple positions XRP as a reliable settlement asset, particularly in the Middle East. This adoption not only broadens XRP's utility, but also strengthens its reputation as a compliant and institution-friendly asset, encouraging additional global participation. Global adoption extends beyond regulatory recognition. Financial institutions are increasingly exploring XRP for cross-border payments, tokenized assets, and decentralized finance. Recent panel discussions and institutional initiatives highlight how XRP is being integrated into tokenized money market funds, cross-chain settlements, and real-time transactions. These practical use cases demonstrate that XRP is not just a speculative asset. It is being actively used as a tool for talking instant settlement, transparency, and efficiency. As more banks and asset managers deploy XRP-based solutions, the ecosystem expands, creating a network effect that drives both demand and value. The combination of regulatory clarity and global adoption has a direct impact on price dynamics. As institutional demand increases, supply scarcity intensifies. The interplay of ETFS, OTC absorption, and staking in DeFi creates a structural environment where XRP's circulating supply is gradually reduced. When supply decreases while adoption and demand increase, the mathematical pressure on price naturally drives appreciation. This is why analysts project significant long-term growth potential for XRP, with the possibility of reaching high price milestones as adoption accelerates. Moreover, long-term investors should consider XRP's multidimensional growth factors. Beyond market mechanics, XRP's adoption is supported by technological innovation such as smart contracts on the XRP ledger, EVM-compatible sidechains on Flare, and liquid staking. These elements make XRP a productive asset, capable of generating yield and facilitating real-world financial operations. Unlike purely speculative cryptocurrencies, XRP combines institutional support, practical use cases, and scarcity-driven economics, which creates a robust foundation for sustainable growth. Finally, the long-term outlook for XRP depends on continued institutional engagement, successful ETF launches, and further DeFi integration. With regulatory approvals in multiple jurisdictions and expanding global adoption, XRP is increasingly positioned as a high-utility asset with both price and functional potential. While short-term volatility may occur, the structural fundamentals suggest a strong trajectory over the next several years, blending scarcity, adoption, and innovation in a way that few cryptocurrencies achieve. In conclusion, XRP's future is shaped by regulatory recognition, institutional adoption, DeFi integration, and global usage. Together, these factors create a professional, data-driven rationale for long-term growth. Investors who understand these dynamics can approach XRP with a strategic perspective, anticipating not only price appreciation, but also meaningful utility as part of a global financial ecosystem.